Hey everybody, good morning, good afternoon, good evening. I'm laughing because I just did all this and I forgot to turn it on. So here we go again. Thank you for those who are coming back and welcome to those who are new. Please let us all know where you're from in the world. So I'm going to try and keep this up, do an investment of some sort, investment video at least once a week. I do a lot of my tech study guides, but I'm going to try and do some other things because this is a wealth building channel. So we need to talk about building wealth, which is investing. And today we're going to talk about shopping the bargains. And just so you know, I am not the expert here. I get all my resources from Kiplinger's Harvard Business Review or Money Magazine. If you have any other suggestions, let me know. And also, if you need a financial planner or tax accountant, please let me know and I can contact me on my website and I can set you up with one. Meanwhile, let's continue. I'm not going to stay on the screen because I am not the center of attention in this video. So, shopping in the bargain bin. Just as fashion rotates, so does stock market favorites. So let's talk about some of the favorites as of July 2022. Okay, so these are some of the favorites. This is pertaining to Kiplinger's. This is what they decided was the favorites. And the broad sector includes telecom companies, AT&T, media and entertainment firms, interactive media services such as Electronic Arts and Twitter. Rising interest rates, higher inflation have dampened the outlook for shares in growth-oriented companies. Over the past 12 months, the S&P Communication Services Index has lost 22%. So the Fidelity Select Wireless has done better in the sector over the past year with a loss of 9.6. Manager Matthew Drucker, Drukker, keeps a trim portfolio of 47, investing in U.S. and foreign stocks. He's one of the experts, I guess, quote, an expert. And he believes that smartphone chip makers, mobile service providers, and firms behind popular apps will be doing really good. And a handful of his top holdings have posted good gains over the past 12 months, including Apple, up 22%. Marvel Technology up 27%, and it's not Marvel as in the comic strips. It's Marvell, which is spelled almost the same way. Stocks such as the social media firm Snap is down 53%. Swedish telecom company Ericsson down 42%. Most of the companies in the fund will benefit from the rollout of 5G, including Verizon Communications, T-Mobile, and Marble. But the adoption of the 5th generation tech standard for wireless networks has been slow. And now it's business as usual, and firms with pricing power, growing market share, or product innovation can drive revenue and boost free cash flow. American Tower, which owns and operates cell phone towers all over the world, the Real Estate Investor Trust bakes in 3% annual increase to leasing rates in the U.S. contracts, such as T-Mobile, Verizon. So clients tend to stick around in those, and some locals, the telecom firms, do not have any other options. All right, so let's look at some of these things I was just talking about here. Hopefully you can see this on the screen pretty good. This is basically what I just read to you, but here it is in graphical format. Okay, let's put the recent underperformance of the low price global technology in perspective. Okay, over the past 6 months, the tech stock heavy NASDAQ composite index has lost 23.7%, but the carnage is far worse underneath the hood, says Global Price Technology Fund Manager Alan Tu. Nearly half of the stocks in the index have dropped 50% from the 52 weeks highs. What's happening in the market that's narrowed? Well, Allen 2 says, meaning a handful of mega cap stocks have held up. We could have some stacks if we would listen to these experts, right? While most others are cratering. CRATERING. All right, let's look at some of the U.S. stock funds in graphical format. The total return on the years. T. Rowe Price, Vanguard. Okay, there's a problem with global technology which doesn't own Apple, Alphabet, or Microsoft. All three have taken their lumps this year, but they've still held up. Better than the NASDAQ index. The fund has lost 39.1 over the past 12 months, lagging 89% of its peers. Higher inflation, rising interest rates, the war in Ukraine have all taken a toll, and a lot of the cross currents are causing uncertainty and fear in the market. Growth companies that trade more on future prospects than current results, most of the fund holdings, in other words, are typically hardest hit in times. For now, Allen 2 is doubling down while prices are low. Okay, these are our international stock funds and our specialized funds, what they're doing right now in a graphical form. 2 is adding to the stakes or building new ones in companies that boost strong business models and solid profitability. In particular, he favors business software and cloud services firms. Even with the share price volatility and the drawdown, growth remains robust in these firms. They have sticky products, annuity-like revenue streams. During volatile periods, it's important to remain focused on the underlying fundamental health of stocks you hold and to maintain a long-term time frame. All right, here's our bond and indexes in graphical form. Holding on to these rocky markets right now in July of 2022 is challenging. This is probably going to come out in June, so it's going to come out ahead of time. But this is really recording for giving the market in July, because they look at the last month. So they're looking at January, February, March, April, May. Okay, so they're usually a few months, they usually report these things 2 or 3 months behind. All right, let's go back, because that's probably doesn't make any sense what I just said. But anyway, this is reporting from Kiplinger's in July of 2022. So they are, of course, we're not in July of 2022, so they must be reporting on, they must be a couple months ahead. Holding on to rocky markets is still challenging, even regardless of what month we're in. Right now in 2022 period, it is challenging. With the gas rates going up, everything going up, these stocks are taking a break. These are tamer tech funds that are out there, and we're keeping an eye on a few, but we're not ready to bail out on global technology as of yet. And that is your bargain bin for July of 2022, which is really reporting for May and June. These are really what's happened in May and June, because they're always like a month or two ahead. Hopefully that didn't confuse anybody, and hopefully it helps somebody who's looking at some of the stats. I can go through these again a little bit slower if you need to, but I hope to do these kind of videos once a week, once a month. At least once a week we're having an investment video. So please come back and subscribe if this is your interest. I'm going to have an investment video at least once a week. I don't know if they're all going to be like this detailed with the stock index and all that. They'll probably be something else. So thank you all for watching. Thank you for subscribing. I'll talk to you soon.